Good morning, everybody. Today is March 2nd, 2015, 9 a.m. Eastern Time. Welcome to Phoenix Trading Strategies Free Trading Room. I want to welcome those of you that have been here before and want to welcome those of you that are new here today. It is a great Monday to start off. As usual, we'll do a brief intro over the website, but first, before we continue, we will go to the disclaimer, and then we will look at news events, and then we'll analyze the charts and see if there's any trades. Disclaimer: future stocks and spot currency trading have large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Again, welcome. It is Monday. It is actually the second day of trading for March, and we enjoy these second days because there's always great things that happen. You can't avoid what the market's going to give you. You can only accept it for what it is. For those of you that have never been here before, I want to welcome you. Take a look at our homepage. Definitely take a look at our About Us page. It'll give you a brief history about myself, my journey as a retail trader to a futures and forex broker to a software developer. It's very interesting because I was able to work in a number of projects as a broker to discover the protocols that the banks were using to report their order flow to the dealers. So, very interesting read. It'll give you an idea basically of my specialties, but more importantly, it'll give you an idea that you're dealing with the right person, you're dealing with the right technology. The blog, very interesting. We have trades that we've placed. You can go to latest trades once you're in the blog. You can click on them. You can see our entries. You can see the videos. Always very, very good. A very good read. The indicators, of course, you can go to the indicators page. You can pretty much read on the indicator, click on it, and it'll give you a brief description of what the indicator does. Very interesting. A lot of this information is for you so that you can understand that you are in a financial war. And it is of the highest order. And make no mistake, you've been given no advantage. You could basically say that a lot of the information that you're being provided out there is outdated until now. So today we're going to go over that. It's going to be very good, and you're going to really, really enjoy it. So let's begin. Let's go to the news real quickly. See what news we had last night. Excuse me. We had quite a bit of news coming out on the euro. Wasn't really impacting. The one that really kicked in was PMI by the UK. As you can see, they came out better than expected. Even though here quarterly unemployment rates were much better because they came in lower for the euro than anticipated, and that's always a very good thing. PMI for the euro came out very well as well. Numbers came in line. So quite a bit of improvements in that regard that helped the euro regain some strength. The British pound, just the same, except here on net lending to individuals, that was down, of course, and money supply was down, which is never a good thing. But then we had CPI, which was better than expected. Core CPI came in line. Unemployment rate was better than expected. And today, this morning, you had current account on the CAD, PCE pricing, personal spending, and personal income, which was not that great for the U.S., so it actually favored And right now, in about 30 minutes, we're probably going to be looking at final manufacturing PMI. No, in about, yeah, final manufacturing PMI for the U.S., as well as IM manufacturing for PMI. We'll see how great their numbers are, or if they come in less than expected. It should be interesting. I always like to look at the news to see what type of news is going to be impacting later, only because it allows you to see what to prepare for. Now here, for instance, I always want to take a look at leap rate as well, and the reason I take a look at leap rate is because it gives me an idea of what the brokers are doing. Always very interesting, especially after the Swiss National Bank intervention. You always want to have an idea what they're reporting, because you never know. You never know who you're dealing with out there. And sometimes they come up with some insight that normally you wouldn't even consider thinking about. So every bit of information helps. It doesn't really help you to really understand what the trade is going to be, but this one's very interesting. Look at this one. New York State regulator investigates major banks for FX rigging. You know, it's funny how he understands what I'm trying to explain, but I do it from a technological perspective. He's barely investigating it. So, you know, it's always interesting to see what news comes out. Not that the regulators are going to do much, because they never do. It's like they give the banks like a slap on the wrist, like, stop that, don't do that. But that's as far as it goes. So, you know, if you get a chance, take a look at this article. I think you'll be very interested in seeing what they're doing. Now, let's continue now to the charts. I actually took a few trades last night. It was about the midnight hour. Identified this level in the higher time frame. Now, this is a 10-minute. Now, normally, I look for them I look for these levels in the higher time frame, the 480, the 240-minute. And the reason for it is because sometimes the volume is a little bit more defined there, more volume, but our indicator, our algorithms really identify their plan of action. The whole purpose of this is to give you the blueprint, their blueprint of their trade. Now, being that said and done, if we go to the higher time frames and work our way down, you'll see that some of these trades were really, really interesting to see from the very go. Well, we don't want to talk about that, John. We like the IRS. They're our friends. So this level was identified in the 4-hour. I was actually giving a lesson yesterday to a few students, and we identified this, and I said, look, this is going to go long. Granted, the power dots didn't move any further, and I'll explain a little further what this algorithm does, these gold dots. But we identified the price level that they were going to be trading around and the direction of the trade. What's important here is to understand the protocol, is to understand what their play is going to be for a Monday. And sometimes even for the week, because if you understand what the level is for the week, then you can really have a good run. Now, I was anticipating it to come up to here to 135.21. It's barely at 134.47. It came as high as 134.56. There was no level here. That's okay. We'll work our way down and see if we find any other levels that make sense. The 240, I didn't find anything there. Very interesting. But we scaled down until we found and mapped out the trade. And once we understood the power play of the trade, that's all it took. I mean, bottom line, you're looking for the power play. You're looking for confirmation of power dots in the higher time frames. In this case, the trade is up 376 on the euro yen, so calculate that from entry to here, we're up quite a bit. Now here, again, we don't have any levels here that are identifying. Actually, this one, no, they broke through this one, and nothing here. So it's just continued. When you don't, and usually what happens, if there are no levels any further. Now here, the one thing that I didn't like was the fact that I saw the trend stop come down, and that's where they're trading above. So looks like it may have one more leg, but I don't like the fact that we have a power dot formed here, because that means that the trade is pretty much dead, over. And that's okay. Sometimes you win some, sometimes you lose some. So long as I leave you something on the table, that's all that matters. Bottom line, that's all that we care about. And you're going to find that during the European session, you will discover with our technology that you will have 3 to 4 solid trades to analyze. And out of those 3 or 4, you can basically choose the best one. Normally, I'm into 3 to 4 trades. Why? Because if one doesn't kick, the other one will. And that's really what this is all about. See, here at this level, I'm very, very happy that this is formed, because even though they broke through this level, it was an invalid support or resistance level that they were using. It's going to be a valid resistance level right here. So I'm assuming that they're going to make a run to this, and that's what I'm expecting and anticipating. So we'll see. We'll give it another half hour for it to kick. If we don't see any change in the news, then this should eventually drive it up a little bit, not too much. We go down to the 60-minute, and we're looking for more levels of confirmation with power dots. Again, we're looking for them to give us the roadmap, to give us their blueprint of the price levels that they're using. You know, these aren't pivots. This is their plan of action. This is what you need to understand, that, you know, what we're giving you is the information that you need. Now here in the 60-minute, we did identify the power dots forming right under this level, and not only that, but they formed at the end of the day, and that it was a continuation. Now we didn't get into the trade right here, but I got in here, which was very close. I was a little bit late because I looked at it at midnight my time, which was 3 a.m. So I was off by a few pips from here. I was off maybe like 20 pips, not too bad from my entry. Could have had a better entry if I would have looked at it sooner, but you know, I didn't. But I knew that the direction of the trade was a go. And that's all that mattered. We analyzed the volume. We knew what they were going to do. It's always interesting to see how they are basically how they are trying to hide their intent, but they can't. Now here again, we saw power dots here on the 60-minute. Didn't really need to draw them out. Here we had them on the 90-minute, and then here was on, of course, the 30-minute. But this was towards the beginning of the day. They did come down, hit the level, and then bounced. That's all that mattered at the end, is that they bounced right off of this level. Now if you use moving averages, which sometimes I do, I use the 50, which is the turquoise, the white, which is 200, and this one right here, orange, which is the 800. And I use them as a visual, not for entries, because they serve no purpose for entries, but they do give me that they will serve as, you know, resistance levels or support levels when I am trading and when I do find trades, and those will probably be the first levels they hit. I was really expecting this to come up to 130, 135, 136.22. That was where I was expecting it, 152 pip run, because there was nothing in the way. You know, because it's a long-term trade and it was identified in the long-term time frame, sometimes these trades do play out. But, you know, like my friend, one of my friends tells me, sometimes if you don't get the full run, you want to take what's all on the table, what they're giving you, and move on to the next trade. You'll find the other one that will give you, you know, the 100, 200 pips. In the meantime, take it off and slowly, consistently grow your account. But didn't lose sleep over this. You know, it was a very simple trade. As you can see the result right now. What was more important is that once I was in the trade, then as soon as it transitioned in the sentiment, I knew that I was done. And I also had an idea that the yen was also starting to lose value in the radar, and the euro was starting to kick up. And this indicator is a little late, but again, it confirms just like the sentiment does. It's not. These two are not leading indicators in no fashion. Our volume indicator, now that's a doozy. That's the one that tells you the magic, what's going on inside the candle. So here, I was able to analyze what was being reported by the banks per candle, per time frame. I could tell here their buying volume, their selling volume, and their cumulative volume, and the story behind what was happening. And this is one of the things that we go over. Well, I went over it very thoroughly on Friday. I'm going to put up that video so you guys can see it, but you guys can also see it in the other videos. But this is the one that confirmed the story that they were not going to break below 133.71. That was the trade right there. So they ended up kicking to the upside, and that's all that mattered at the end of the day. If you're hearing analyze me, it's because we set up the market analyzer to alert us of the trades that are in play. Now, it makes your life easier, and it certainly makes my life easier because it allows us to see that. Yes, I could tell they were going to that next ATR level. We'll go over the market analyzer a little later. But right now, as you can see, there's nothing holding them back, except for the fact that now you have two pivots here, and that sort of gives me an indication that it's time to exit the trade. So we're going to take a snapshot of this one before we close it. Save as desktop. See, make sure that, yeah. Okay. And we'll end up closing. Let's see how many pips was this from top, from our entry to where it's currently at. 40 pips. Can't go wrong. 40 pips or 40 pips. Alright, let's go to the next one. The next one was the Euro Pound. I like that one. I saw that one and I was like, this is interesting. Seems like the Euro's in play, but not in all of the currencies, just in 3. Had the best setups. And that's what you're looking for. You're looking for the best setups, for the best plan of action. Now here, for instance, we identified this level in a higher time frame. And as you can see, again, I got in a little late. It actually started during the Asian session, and it continued. I would expect it to go up here, but, it's done what it's done, and it's held off right here. So let's take a look at the higher time frames real quickly. Drill it down, and then close the trade. Okay, well, the levels were identified at the top, not at the bottom, so we have to work our way down. Give it a second. Yeah, I know I went to IHOP this weekend. I love their pancakes. Can't go wrong. Nope, nothing. Again, the level is identified in a smaller time frame. So let's continue. Trading is hard, but the way we make it is more simplified because of the information that we're giving you for you to make your decisions off of. Now on the 120, nothing, so let's see the 90-minute. That level was really, really good. I remember that one. Because I saw it during around 3 a.m. Eastern. Here it is on the 90-minute. Let me expand this further. You can see the power dots. You can see that the pound was going down. The euro was making a step to the upside. They started off during the Asian session, never looked back. If you would have gotten in during the Asian session, this thing would have been, let's see, would have gotten in here all the way to where it's currently at. You're looking at 50 pips. From my entry, 27 pips. Is that right? I guess so. It's really paid off really well, actually, for 27 pips. So on the 90-minute, it was clearly identified, and as we scrolled down, we looked for more confirmation, but there wasn't. Sometimes you don't need it. If it's in the higher time frame, the 90, the 120, the 480, the 60, or you get the 90, the 120, the 480, and 240, and then you get confirmation on the 60, and the 60 was right here, which was a continuation. You can see the power dots form right above this level. This is the one basically gave it away and said it's going long. I was just late on because we were analyzing other pairs while I was doing the training session. But then once it moved, remember my entry was here. And if I would have waited another 2 hours, this says 2 a.m., but it's actually 5 a.m., at that point you can move your stop loss to break even, let them write it. And that's basically all you do. This is not a complicated trade, a very simple strategy that you can follow, especially on Sundays. Sundays are days where they give you trades. You will find 5, 6 trades on a Sunday afternoon, U.S. session, Monday morning for the Asians, definitely a really early morning for the Europeans, a lot more earlier than you really want them to be. But they're money days, you know, you can't go wrong. So the nice transition was perfect here. You had it was extremely bearish in the sentiment, transitioned to slightly bearish to slightly bullish, and then it kicked. When that happened, though, you know, we had power dots here on the 15-minute. My entry was here, right before it popped, or right before it went boom. It exploded to the upside. So I had confirmation in this level right here, and that basically told me that they were going to continue, which they did. And you can see how the euro just continued to gain strength in the radar. The volume was perfect. You couldn't go wrong with the volume. It was a great trade. Can't go wrong. Let's take a snapshot of this. And let's close it. I still want to measure how many pips that was. That didn't make sense to me, but my entry was here. Exit was here. 28 pips. Incredible. That one pays very well. I have to admit that the euro pound pays very well. And let's go to the euro USD. That's the next one. So we had 3 trades that yielded us very good returns. $40 pips on one, 28 pips on the other. And here this one's giving us 43 pips. Again, this one was weird. I didn't find the levels, but I had a hunch because of what was happening. And sometimes you're not going to get that. So I wanted to wait and see a little further. But because I knew that it was going to play against the euro yen and the euro pound, the logical thing was that it was going to go long. And it was at a level that it was just not going through. So even though I didn't have identification of the power dots, I looked at the volume as if I did at that price level. And let's work our way down. Sometimes you'll get into trades that don't have that level of confirmation, and it'll depend on your experience as a trader to define whether the risk is worth it. For me, I did define that the risk was worth it from that perspective. Again, nothing here, but I did have 2 pivots, and when I saw that, I saw one pivot, I said, okay, that's the one that they're not going to play off of. So we'll draw a little line on that one. So we can see it in the smaller time frames. Give it a second. See, here we have 2 power dots on the 120. That's telling us that the trade is over. So what you want to do is you want to identify them. And they're doing it right at the 800. Mischievous little traders, aren't they? They just didn't have enough reason to drive it up any further. But that's okay. It allows us to see where their play is at. Go down to the 60. You know, I will usually go back 30 days on NinjaTrader. I'll usually need 30 to 45 days of data to go back, and normally I will hit the mark. I'll be able to identify previous levels that they've used, and it'll give me a very good way to map out, because as I move into the smaller time frames, it allows me to see that they're repeating around those levels because they're price levels of high priority to them, of utter importance. And that's something that you need to understand. If you don't get it, then it's not there. See, nothing on the 30-minute. Let's see if on the 15-minute we had no power dots as well. And we'll go down to the 10-minute last. Sometimes you'll be surprised that 10-minute can be the gift of all gifts. Nope. However, we did identify power dots here on the 15-minute, and I knew that they were going to break them because of the way that the candles were trading above the trend dots. These little dots right here are trend dots. The minute you see this transition here, as they stop trading below and then start to merge towards them and trade above them, you have to wait for them to break the trend stop. You'll get a new trend stop, which will allow you to see the trend is continuing to the upside. And because they formed here, and the way that they were going in an angle, I knew that they were going to break them, but they were going to come back and retest this level one more time. And even though we didn't have power dots, we have them here now, which was pretty much a continuation of the trade. But this trade is pretty much over. Let's take a look at the 10-minute. Then we'll take a snapshot of the trade and close it. Now, we got into these really premature before the news came out. Nothing here at the bottom, but definitely right here at the top. They came down, of course, they hit it, and they moved up, but this is basically where it ends. So it's at 44 pips right now. We'll go back to the 15-minute. We'll close the trade, and then we'll look to see if there's any other opportunities to take. Okay, let's take a snapshot of this image. Save. And what I'll do is that I will create an email, take a snapshot of these trades for you guys to take a look at, and we'll also post up the video so you can see. Now, I was expecting this to come all the way up here, but it didn't. This is really where I was expecting it to come up to, which would have been a 100 pip plus run, but they held their horses, so it is what it is. So we got out with 45 pips on this one. Not too bad. You're looking at a total of, let's see, if you were in these trades. First trade was 40, next one was 28, and this last one was 45. 113 pips for the night. Not too bad. I consider that a very decent night to trade. So it does make a difference from that regard. And sometimes not having impacting news will still yield you the return in the trade that you're looking for. So don't be discouraged if you don't have a lot of news that's going to, a lot of aggressive news that's going to drive the trade. Sometimes it's better not to. Now make no mistake, when there are, strong news coming out, like during the Aussie session, you'll usually find, that those pairs will move aggressively 50, 100 pips in less than what do you call it? In less than a second, as soon as the news release is given. We usually find that information. We usually see those trades before it happens. So that's the one thing that you have to take into consideration, that sometimes you're going to get some really great trades, and other times it'll be a little different. So it's something to take into consideration from that regard, that many times you have two ways of trading this. You have a very aggressive way of trading it, which still yields you great trades for a non-farm payroll, and I was going to mention that we are going to be opening up the room very early for non-farm payroll. I'm going to open it up at about 8:10 a.m. Eastern Time. So you really want to not miss it, because normally we'll find 3-4 great trades, and it'll allow you to see how we trade non-farm payroll. You can actually see what we did last month here in the blog with non-farm payroll. We came out pretty good, actually. Yep, we made over 300 pips. You can see the trades that we took, and you can see the video. We were in these trades literally 15-18 minutes before the announcement, and we knew the direction that they were going to go. There was no mistake about it. You can see how many pips we made per trade, what the dollar value was. It was a great non-farm payroll. Just can't go wrong. And we do it every month, so you can't miss. It's one of those things that we're doing everything based off of our technology, and our technology is very mathematical. We look at volume from a different perspective than everyone else does. That's really the bottom line. Our indicators are unmatched. I've looked for people that talk about order flow trading through volume price analysis, but they don't really have a good grip on it the way we're presenting it. I think that we're presenting it in a much more complete package for people to really understand and to really trade off of, because one thing is to talk a good game and talk about theory, but another thing is, okay, now show me, how am I going to trade it? How am I going to find trades with it? And they don't have the technology behind them to support their theory, where here we do. Here we try and give you that edge. We try and give you the ability to see what is coming up. Yeah, that little volume box does it really well. It is, we worked hard at it. I mean, we put, over 2 years of research and development into this, and finally we came up with a product that we knew would make sense, that we knew we could trade off of ourselves, and that we could show people that they had a fighting chance now. See, this is what I meant. This level here was going to start to come back, and once I've made the trade, if I don't see power dots forming here, once I've made a trade, I'm done. I don't need to take another trade to repeat it. But here, for instance, it's telling us this is on the 20 minutes, so I'm really intrigued now. If it's on the 20-minute, it's worthwhile looking at. That means it's setting up right before the news. Now, the market analyzer is a very unique way to look at the market, and I'll show you why. We actually streamlined it so that you would not be in front of the computer 24 hours a day. You have to have a life I have a life. My students have a life. No, nothing here. It's important. It's getting to congestion, that's why. So what we did here is that we basically gave you a real easy roadmap. You can change the columns here to a 20-minute, a 15, a 240, a 480, a 90, whatever makes you happy. I'll show you, normally in the trading session, I show you the time frames that you should have, they should be looking at. Now, when it says analyze me, it means the power dots are forming. So let's find one that does show that. Maybe the Aussie dollar will be the one. Didn't really look at that one yesterday. So when it gives you the alert, it tells you, here for instance, see, you could have easily seen this trade at 8:40 a.m. Eastern that it started to unfold. And this is a great example because it didn't really, it came down during the evening, during the Asian session, didn't do much during the European session, came down again, retested. But now, what's important about this, that's going to give you a lot more information. We're going to go over that information soon. So what this does, it allows you to scan real quickly what are the pairs that are in play. And if it's within a congestion, price to congestion, it'll say trade with me because they're basically in the middle of power dots and trend stops. And so it gives you an idea. But here, for instance, we had identified in a higher time frame this level. 0.7748, they weren't going to break it. And they did come down close to it, not aggressively, but there were never any power dots here to justify a trade. They formed now earlier during the U.S. session. So the market analyzer is a great tool, a great asset to have because it allows you to see everything. If there's a wide bar, you'll see it here. If it's a power dot, you'll see it here. If it's a price of congestion, you'll see it right here. It gives you all that information. This trade was a giveaway yesterday because on Friday they announced they were going to come down, and they came down like a stone. Unfortunately, we weren't able to look at it. Let's see how far these guys came and brought this down in the first trade. It would have been 45 pips, the easiest 45 pips you could have ever made. We saw the same thing in the pound Aussie and in the US yen right at the gate, and I'll show those to you. But right now what I want to show you is how our volume indicator is really unmatched. There is nothing out there that you can compare it to because it gives you information that you only dream of. Now, here for instance, you're seeing the volume, and again, the volume, buying volume here, selling volume here, cumulative volume here. Now, in forex, there is no real volume out there. We're synthetically creating it and showing you the emotion behind their decision process on how they're quoting. Why? Because you can't see that just by the human eye on what's happening in this candle. Most people that talk about volume spread analysis talk about Wyckoff and his theory. They only take into account the open, high, low, and close. Well, so do the banks, such as the case that they've kind of programmed against candlesticks, and you're going to see today why. The volume in this specific time frame on the 15-minute, as you can see, when this first power dot formed, this one showed, number one, what does the power dots tell you? It's a very unique algorithm. It tells you the price level that they're going to be trading around. Tells you that there's going to be volume and momentum buildup, and it tells you pretty much the direction of the trade. That is very important. So next, once we identify those price levels, and we identified that they weren't going to break below this price level here, so they pretty much stretched out. They'll change the frequency. What I mean by frequency of price level, where they will literally distance themselves from a higher time frame. And you can measure it. In this case, it's 17 pips. If you see that power dots form within 10 to 20 pips from a higher time frame, it's a valid support level. And that means that they're going to be trading around this level now, no longer going to be coming down here. So that means that you can actually put, if you enter a trade, actually put your stop loss down here. But here's where the volume comes in. Take a look at this, how we synthetically created to give you the emotion, the feel behind the decision process. So here we had 160 million on the buying side, 198 million on the selling side, a difference of 37 million on the sell side. Now what does that mean to you? That's the first question you should ask yourself. What does that mean? How can you interpret that around a price level? What it tells you is that there was more selling volume, and yes, granted, it was a much bigger bearish candle, but it also said one thing. It said that the buyers were not willing to buy below this price level. So even though the sellers were offering 198 million in orders, the buyers only offset 160 million because they were not going to go below this. And they basically, this is where the negotiation, the chess game begins. Because here's where they start to actually play out, to see, all right, well, how much do you need to offset? I want to take it long, you want to go short, but I'm not taking it short because I lose at this price level if I go below this. You lose until you offset your book. So here is where you're going to see the sellers actually offset their short positions before allowing it to go long, because they're not going to take a loss. So this is the inside information that you never had. This is the one, this is that moment of enlightenment that you've been looking for. You've been waiting for someone to tell you this information and guide you to understanding what they're doing and why sometimes they take an hour before, moving a specific currency. And really, these are not the high frequency candles that you think they are. It's the little itty bitty ones. These little ones. These are the devilish ones. And we'll go over those. But once they identify the price level and they actually change the frequency to a higher level, which in this case they did, then the negotiation begins. Because you always have more than one bank. Usually you'll have 4, 5, 6 banks that are in play. And there's always one that's leading the pack. Why? Because he has more exposure, bigger risk. There's another indicator that I use that actually depicts the percentage of interest of each bank, but today we're not going to go over that. I go over that in the training sessions. Now, being that said and done, here it showed us a picture of what was happening. Now this previous candle, I always look at the previous one. Sometimes I go to the two before they formed. This one, 95 million on the buy, 68 million on the sell, 27 million on the buy side. What does that mean? Yet it continued to come down, settled lower than the previous candle, yes, making it pretty much an inside bar. Why? Because this gray, when it goes gray, it tells you that it's trading inside the previous bar, which is what it did. So, what does it tell you? It's telling you that the buyers would love to bid this thing to the upside, but the sellers won't. And so they'll offer their quotes around this price level, and the sellers will take it because they're still comfortable buying at this price level. They're still comfortable. They can still book a profit here. The sellers can book a profit, and the buyers can book a profit. So here's where the negotiation begins. This previous one, 60 million on the buy, 84 million on the sell. Why did the buyers buy less? Very simple. They're pulling away from this price level right here. The further away they pull away, the less they will buy. The more the sellers will put out there to sell. Doesn't mean that those orders are going to get filled. Here, for instance, this next candle, a lot of volume. I mean, they really pumped it. 142 million on the buy, 87 million on the sell. A difference of 55 million on the buy. Why? Does that mean that the buyers have control? Not necessarily. What it means, in this case, and how you should interpret it, is that this price level is in negotiation. They're negotiating terms. So what this means to you, and you can see the emotion, the buyers want to drive this thing up. The sellers do not want to drive this thing down, but the sellers don't want to sell up here. Thus, you have a difference of 55 million in bids that weren't offset because the sellers didn't want to sell higher than this price level, but they settled up here, said, okay, fine, you know, I'm still willing to sell to you up here because I did sell to you at this price level before. I can still offset part of my risk. This next candle didn't really do much, but let's look at the volume. The volume starts to decrease here. 132 million on the buy, 117 million on the sell. You had an increase of selling volume. You had a decrease of buying volume. Why? Because, again, we're in negotiations. You're seeing that. That makes a difference. Here, this next one, the buying volume is less, of course. 109 million on the buy, 84 million on the sell. Difference of 25 million more that the buyers were interested in buying, but the sellers did not give because they don't want to give anymore. And that's why you're seeing this one on the live edge of the market right now. You can see the volume that they're reporting. 59 million on the buy, 48 million on the sell, a difference of 11 million on 11 million positive, and now you can see that the sellers are starting to increase as well as the buyers. 60 million on the buy, 52 million on the sell. You're starting to see the emotion behind their decision process. This is where they're negotiating right here. They're negotiating within a very tight pip range, and if you can grasp that concept, and that's a 12 pip range, then you win. Because they can't take that from you. That's information that now you have and understand that they never wanted you to get. That's what we're giving you. We're giving you an edge on information that most retail traders out there never ever come close to seeing before their very eyes. This is the value of our technology. This is the value of our trading. This is the reason why you cannot continue to trade this market blindly, because this is a digital warfare. You're in a digital war, and they don't play fair. They have invested billions in designing these protocols. Now, if your question is, well, you know, when they find out what you're doing, will they counter-program? The answer is no. I'll tell you why. Number one, I'd have to sell tens of thousands of licenses, which I'm not going to do. Number two, they would have to invest billions of dollars more, of which they've already invested, in designing this protocol. I basically just reverse engineered their protocols, counter-programmed their algorithms, and I'm seeing what they don't want me to see. And I'm giving you what they don't want you to see. That makes a difference. So, let's look at another pair. Even though we have them, you know, this still is negotiation. It could come down one more time to this level before it bounces. But the U.S. session is a little tricky, especially after you've had an active European session. Sometimes you just want to wait and hold and not get too anxious about going. At this point, I'm not a player. I'm a spectator. You know, they have to paint $1 million picture for me to take it. This was $1 million picture. You could literally live, you know, make your week off of a Sunday at the Asian, you know, at the open of the new day. Sundays are great. You'll find, believe me, between 3 to 6 trades that will make the difference for you. Let's take a look at the pound Aussie and I'll show you why. I believe we looked at that one yesterday. Or was it the Euro Aussie? We'll see right now. But this trade yielded 72 pips out the gate. 72 pips. It was literally a gift. Excuse me. Okay. Yep, this is the one. On the 20-minute. It announced it perfectly right here. Look, they went to a previous level of a higher time frame. This thing measured, I mean, when we saw it too late, you know, during the training session, but it was a sight to see. I mean, it was 85 pips here, but to that level, from top to bottom, you literally could say 100 pips. Would you have made all the 100 pips? No. Would you have made 80 pips? Yeah, you would have taken 80 pips out of their hide. Make no mistake, I've got no sympathy for them. I despise every inch of what they've done. I think it's evil what they've done because they trick the retail trader into believing that he has a fighting chance to win. And they set the ground rules to benefit them, not you. Let's take a look at some questions here. No. Your question, R&D, is no. The market profile or volume profile have any consideration in your calculations? No. No, my calculations, the algorithm that we designed is much better than what many people say, and it works great for futurists. You have to understand that this software has a mind of its own. We created it to do many things. Originally, we created this one specifically for FX, but then we came to the conclusion and discovery that the changes that we had made were also adaptable in the futures market and stock market. So with this software, you get the best of all three worlds. Bottom line is that makes a difference, huge difference. If you don't have, potential to make money in one, you have the potential to make it in another. Now, the U.S. session is always very active, for the E-minis. Now, we'll take a look at this one. We'll take a look at the E-mini S&P. I like looking at gold. I love gold. Gold is a great market to trade. We look at different time frames, of course, to identify the levels in futures, because they're not the same as FX, but at the end of the day, it's the same strategy, same theory. Calculations don't miss. Remember, it's a zero-sum game. If you add and subtract, and you know how to add and subtract, you can read the story. You can read between the lines. This is not major calculus for you. See, out the gate, when the market opened, it came down, stayed around congestion, played around it, then came down again. So these power dots are very powerful. I mean very powerful, because they'll set the tone. Imagine if you would have been in the first trade, just to give you an idea. And let's say you would have gotten in here. That would have been 2 3/4 points. Now imagine that you would have traded this during the European session when it came all the way up, and you knew it wasn't going to break above this level, and that it was going to come down even further. Well, then the total move here was 7.5 points on the E-mini S&P. Let me tell you something. The most powerful gift you can get is information. And in this case, knowing the direction of the trade is worth more to you than $10 million. For me, it's worth millions knowing what they're doing. Why? Because I'm a small player. I'm not a big player in this field of dreams. No. I just want a little piece of the pie, a tiny crumb. And I don't want them to see me coming. And they can't. Why? Because if you really think about it, do you really think that you're going to affect their interest by having winning trades every day? Really? Do you think you're going to affect their bank account? No, you're not. They know that there's 1 to 5% that will have success. And there's going to be that 1% that's going to really excel at it. And so, but they have 95% that they're going to literally strip down to the bare bone, take every dollar they put out. Now, in futures, because it's a centralized exchange, you can actually see pretty much all the volume they're reporting. The way we present it is a little different, of course, but it does the trick. Here, for instance, right now on the live edge of the market, you can see how many orders they're pushing through, or contracts. 1,664 on the buy, 1,730 on the sell, difference of 54 on the sell side, 25. Why? The sellers, as pulling more away from their level, they're selling less. Buyers, right here, they're coming to a level where the buyers don't want to buy anymore. For some reason, the sellers are offering and offering and offering, and they're waiting for the buyers to come in. And the buyers, for some reason, aren't aren't following through. So this is a bullish candle with bearish volume. Are you kidding me? Have you ever heard of such irony before in your life? Does that even make logical sense? No, but it does make mathematical sense. And that's the difference. If you can grasp those concepts, then you can interpret their plan of action and you can win. That's what matters at the end of the day. Can you be in that moment? Can you be in the zone of the institutional mindset, which is exactly what we're teaching you, because that's the only way you're going to win. We're teaching you to understand the institutional mindset, not the retail mindset. Moving averages don't mean anything to me. Would I have made my decision of trading in any one of these forms or any one of these trades to the downside based on what the moving averages were doing? My answer is no. Not at all. There is nothing that they gave me that made this trade worthwhile for me to actually take. I couldn't manage my risk. I couldn't know what the stop loss was going to be. I didn't know what parameters they were playing within. Nothing. Exactly. The only thing moving averages do is pollute the chart. Very well said, Sasha. Very well said. You know, moving averages work off of price action. If the candles don't do anything, don't move, what does that tell you? That the moving averages won't do either. Look at the volume on these. This is where it's going to kill you. And it's going to really, really upset you. See these little candles right here? Look at how much volume is into this. 59 mil on the buy, 143 million on the sell, difference of 84 million on the sell side. Really? I mean, come on. Look at how much volume is in this little candle. Are you telling me that this is not high-frequency trading of the highest order in the most deceitful manner? This next candle right here, insignificant, not even a pip. 98 mil on the buy, 76 mil on the sell, difference of 22 million. It's a bearish candle. The volume bar can't even come out, doesn't show anything. And they're telling you that there is no action? There is no move, but there is action in depth. We're giving you the depth of the market, the depth of their intent, the depth of their survival. Next one, 100. What's the difference between this candle and this candle? Nothing. Look at the volume increase, 199 mil on the buy, 87 mil on the sell, 112 million difference. Oh, are you kidding me? And this candle didn't make a move to the upside? Seriously? What? Does that even sound logical? Can you imagine if this candle reflected the volume activity in the candle and it actually went all the way up, all the way down? Wouldn't that change the way the moving average worked or portrayed itself? The answer is yes. So have they counter-programmed against moving averages? You betcha. Have they counter-programmed against MACD? Make no mistake. Against stochastic? Against RSI? You betcha. They've counter-programmed against everything that the retail trader out there looks at, except their own volume activity. And what we've done is that we've taken that information, turned it around, and we're using it against them. Why? Because we can. Number two, because the technology now allows us to. That's the difference. So if you're really learning to get a grip on order flow trading through volume price analysis, you have finally gotten to the final frontier. This is it. Phoenix Trading Strategies does exactly that. Gives you not only the theory, but the technology to back up the theory. Where others talk a good game, we finish it. And we show you with evidence. We show you with live trades. Now we do have a European session, so I'm going to pull that out for you. And I'm going to give you the link for that. Give me 1 second. I'm going to post it here so that you can actually go into it. Give me 1 second. My suggestion, don't miss. It's always very exciting when we trade the European session Thursday mornings at, what do you call it? At 2:30 a.m. Eastern. We do it for about 2 hours. Sometimes I'll go the full 3 hours. Let me make a copy of this, and now let me post it here in the room. Hit this link, and it'll take you to registration page for the European session. This is for Wednesday night Pacific, which we start at 11:30 p.m. Pacific. Thursday morning Eastern time is 2:30 a.m. Don't confuse. So go by Eastern because everyone else goes by Eastern. For those of us that are here on the West Coast, it's still Wednesday night. Now, if you have any questions, I'm going to give you my email so that you can contact me, and feel free. I love talking to people, and I love helping people, especially when they want to learn how to beat this market, because you want to play in a level playing field, and that's what I think we give you. You can email me, you can Skype me, and you can call me. Take down this information. So my email is Ricardo, R-I-C-A-R-D-O, at phoenixtradingstrategies.com. My Skype is Ricardo, R-I-C-A-R-D-O, A-T, P-F-G, at P-F-G. That's where I used to work a while back. And my telephone number is 818-431-1357. Would I have taken, now a few questions, would I have taken this trade long? The answer is no. I didn't have power dots here. If I would have gone into the smaller time frame, let's see. Maybe that level was identified. And if it wasn't, then I wasn't playing it. I only play in the direction that they give me. I don't like to guess. It doesn't work. Nothing here. But here is much cleaner. On the 20-minute we saw it. On the 10-minute it was really clean. Out the gate, you couldn't miss this trade. Sundays are really great, I'm telling you. Whether you're trading futures, whether you're trading FX, whether you're trading stocks. You can't do much with stocks, but on futures and forex, my God, you really have really, really good information to make your decisions off of. I mean, it just doesn't get any better than this. Nothing here, wouldn't have taken it. Sometimes I will go down on futures to the 5-minute, and sometimes even the 3-minute. It's a different strategy of time frames. The information is the same. What you're interested in finding out what you should be looking at and when you should be looking at, so you can program the market analyzer to suit that for you. That is what will make the difference for you. That is what will change the game. Nothing here. Nothing on the 5-minute. So no, I wouldn't have touched this. I would have stayed away from this one. Let's pull this one out, see if we can find. Let's look at gold. Gold's always interesting. You know, that one packs a punch and doesn't even tell you sometimes when it packs it. During the European session, it was pretty active last night when I looked at it. Let's take a look at this. 15-minute. Yeah, it looked white on the analyzer. But it was really active last night, though. And it was active right at the end of Friday, telling you it was going to go long, and it went. And this morning, telling you it was going to go short, and it went. So never, ever think that gold isn't going to give you the trade. Your first move would have been worth $9.50 to the upside. No news intervention, a beautiful trade. This was money they love to give away. The next one was this morning, and this was at 8 a.m. Eastern, 5 a.m. my time Pacific, $7. Really? $7? Now, for those of you that don't trade gold, you should. For those of you that have the ability to trade on the gold spot outside of the U.S., you are the luckiest individuals right now. That's right, $700 move in one morning. So let's say you would have made your trades last night in FX, you would have picked up 100 and some pips, and then this morning you would have taken this trade. I mean, really, I'm telling you, I've never been excited about trading the markets the way I am now, and I've been doing this for over 10 years, over 11 years actually. And I started off like many of you. I started off as a retail trader. I can tell you that my first piece of software that I bought was Forex Made Easy, and I lost a lot of money trading with it because it was only 2 moving averages, but I didn't know any better at the time. You pay your dues. Yes, gold is the definition of emotion, but damn, we love the emotion when it goes our way, don't we? It's like, go baby, go, go, go. So you got to look at it from that perspective. So yes, one of the difference for me was when I did, I started taking courses. I took Steve Nissan's course on candlesticks. Didn't really help me much, I can't say. I loved his book because it gave me an understanding of the language behind, the internal language behind the trade, but it didn't make a difference in my trading. Finally in 2007 I decided that I needed to do something to find out why I couldn't figure this market out. And I became a broker because I knew that there was something I was missing behind the scenes, and I was never going to get it as a retail trader. So I became a broker, worked for PFG, and I was fortunate to work with a team of developers that developed the first electronic communications network, the first ECN. We were the first ones to create a bridge for all 12 top tier 1 banks into one master feed for the retail market. And that's where I learned the protocols on how they were reporting their order flow through that bridge into the platform to the dealer, which was for you. And let me tell you something, when that happened, later on I discovered that when they allowed us to create that, it was really to serve the retail market on a silver platter to them, which was never our intent. We were always doing it to try and make it a fair playing field, so that you wouldn't trade with broker-dealers that were taking the opposite side of your trades, because that's even worse. But the banks are so deceitful that they started to create different protocols at that moment and counter-program common indicators that you use. And that's why, finally, after PFG went down in flames, I continued, and we developed this technology, which took us quite a while. But now we've come to the point where we're content with the results that we're getting. We're content with the results that our students are getting, and that's what makes the difference. So I want to thank you very much for joining us today. If you have any questions, again, like I said, feel free to email me. If you need me to put up the link for the European session, try not to miss. Believe me, it is the one day that my students actually benefit from the way that I analyze the trades, because it shows them it's a continuation of the 3-day training that I give them, and allows them to see the trades unfold before their very eyes. with this technology. So it's a bonus. I do it as a bonus. So that's pretty much all I have to share with you today. I want to thank you very much for joining us at Phoenix Trading Strategies this Monday morning, March 2nd, 2015.